Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and this is just for educational purposes only. Now that's out of the way, let's jump into the Bitcoin chart and crack on with some zero bullshit takes. I know that's what you guys are here for. Okay, so what we're going to do this week, like usual, we're going to talk through the trades that we've had throughout the week. Talk about the winners, talk about the losers, and also talk about the missed opportunities because we've never covered that. And I want to talk through the psychology behind it so you guys can learn from all of this. So make sure you pay attention. And then right at the end, we're going to talk about what I'm going to be looking for next. Okay, so first and foremost, big shout out to today's video sponsor. As you guys know, BingX, I've worked with these guys for quite some time. Not only are they a crypto exchange, but you can also trade commodities, stock indices, and Forex on them. I've traded with these guys for quite some time, and since the announcement that some other exchanges are pulling out of the UK due to whatever laws that they're implementing, I've now moved my crypto trading over here. So if you guys want to check them out, there's a link down in the description, and they are a no KYC exchange. So if you are in the UK like me and you want a platform to trade on, these guys are an option, okay? Right, let's move in. So zoom in, we'll zoom into the 1 hour chart. So since the last YouTube update that we had, price had been around here, give or take, around here. Since then, we've had effectively some sideways price action, followed by a bit of a sell-off of the last couple of days. Okay, so this is where we'll start off. So Thursday, we're going to start off. So this was just after the video was released for you guys, for the public. I was posting in the group saying we've potentially got a 3 drives pattern here. Okay, coming up into this red box. This is just as we were just getting into the red box on the first week. Okay, and I'm saying if I see some weakness, I'll be adding back into Monday's short. So if you guys were paying attention on last week's video, I was saying that I was still holding the short from up here, and I was looking for an opportunity to add back into it. Okay, this ended up being the opportunity. So the 3 drive pattern, as you guys in the group especially know, this is one of my favourite patterns. Now, I know some of you will be sat there scratching your head saying, yeah, but Spitty, you take the piss out of patterns. I do take the piss out of patterns, but I take the piss out of your standard retail patterns. So your head and shoulders, your triangles. Yes, that looks like something else before anyone makes the comment down in the description. Triangles, or, you know, these good old double bottoms and triple tops and all that shite that people bang on about. Okay, the beauty of all these patterns that you just saw then, they all require a breakout trade. Now, the patterns that I trade, if you notice, they don't require a breakout trade. They require a mean reversion trade. So this is why I prefer these, because they have a higher hit rate, plus they have hard rules. And if that rule was broken, then it's invalid. So in this case, getting above this 1.618 extension, the whole idea would be invalid. So therefore, it gives us the opportunity for a tight stop loss. Now, bear in mind, I added back into my previous short, so my entry was actually just above up here. But anyone that took this in the group could have entered, there you go, invalidation above the 1.618, and you got yourself a nice 6-hour trade out of that because it came smack bang into target. It actually went a little bit through target. So yeah, so you got a 6-hour trade out of that. Now, if you sat there scratching your head thinking, what does a 6-hour trade mean? Because it's only a 2.3% move. Give your head a shake. But in basic terms, if you risked $100, so if you got stopped out of this trade and you lost $100, you were risking that $100 to make over a $600 return. Okay, so that's a good risk to reward trade. Okay, so as you can see there, how trades can add up quickly when you understand what you're doing. Okay, so that's Thursday's setup. I'm not going to linger on that too much. Coming into Friday. Okay, so from Friday, obviously this was Thursday's short, which ended up coming back up and then dropping back down again. And then we got the move up. So as we're starting to get this move up here, I'm updating in the group my Elliott wave count. Okay, now I'm not going to go through the ins and outs of Elliott wave within this video because it's very in-depth to learn about it, but obviously if you do want to learn about it, we've got an Elliott wave full course on the website. Okay, it's part of the modules anyway. So I'm saying if we do take today's highs and Monday's highs into the naked point of control, this count would be valid. Okay, so you can see the naked point of control here, which was the capping point. This count would be valid. Okay, and then just before I'm logging off for the weekend, this is when we're about here. So this, you can see this is 8:30 my time, which would have been 7:30 UTC. So it would have been about here. These are my weekend thoughts. So my plans from earlier still stand this weekend. Okay, so the guys have my full trading plans. From here, I have very little interest. So where we are right now, I have very little interest unless we start to lose some structure but the odds are in favor of taking the highs locally, as in taking these highs. Okay. Next obvious level of interest is the 28.297 naked point of control, this level here. Okay, so you'll see here, you'll see this, and I'm going to cover this. I have plans for both sides. Okay, so I've very little interest where we are right now, unless we start to lose some structure. So therefore, what I'm referring to here is when we're here, if we start to then lose some structure to the downside, okay, then I'll happily get involved in new shorts there. I'll happily get involved in new shorts there. But the odds are in favour of taking the highs locally. So what I'm not saying is, I'm not sitting here pretending that I'm some sort of trading god, saying that I know full well that price is going to go there, and that's where you take your short from. I'm saying I'm happy to be wrong with this, and I have a plan. If price starts to lose some structure locally, I will take that short. So you'll get a lot of these gurus and influencers online that will just show you this. So for example, if I just showed you this, you'd sit there and think, wow, Spitty, you're an absolute fucking trading god. You knew exactly that that level was coming up there, and that's where you were going to take a short from. You knew that price was going to go there. Did I fuck? I did not know price was going to go there. I'm showing you my full plans. I'm saying if we start to break down here, I'll happily take a short. But the odds are that we're going to go higher. Okay? So I'm not going to sit here and LARP and bullshit you. And obviously this is what you guys come for. You want the honesty. Now, I'm referring to the Elliott wave here, just to give some guys a little bit of context, especially if you do understand a bit of Elliott wave. What I'm looking at here quite simply is, just zoom into the 15-minute chart so we can see this a bit better. So I'm looking at wave 1, 2, 3, 4, 5. Okay? 5 waves down. Then what I'm looking for 3 waves up. 1, 2, 3. Now, once this came down and took out these lows, now, if my count is to be correct, and again, it's if, I'm not saying this is 100% correct at the time. It's not correct until it's proven correct. But my thought process is, we've come down, we've taken these lows. This looks like a 3-wave move up to me. This looks like a 3-wave move down to me. Okay, if anybody wants to argue with me, absolutely fine. Elliott wave is quite open to interpretation. Then when we start coming back up here, this is then when I'm starting to post that count saying, well, the B's taken the low, so therefore it's either going to be a running flat, which means it would have ended around here and then rolled over if it was going to, or the next most likely target is going to be up here. Now, the reason why it's up there is because if we do a fib extension from the low to the high, so from the start of A to the top of A, project it from B, we get the absolute perfect 1.236. Okay, expanded flat. Now, your next common target for your expanded flat would be your 1618, but you'll see this now. The reason why I was confident that it wasn't going to be the 1618, because if it was the 1618, it'd have taken these highs and therefore ruled the count invalid. So therefore, what's the next best level under the 1618? The 1.236. Okay, that 1.236 lined up perfectly with the naked point of control. So we got the short. Now, again, some people are going to sit here and say, well, how did you catch that on a 1 minute time frame? Did you have a limit order? No, I didn't have a limit order. I enter at market most times, and therefore you can see here, you actually only had a minute, maybe 2, if you got in on the second one, to get into this. So how did I get this? Well, this is something I do teach in the group, and I talk about this kind of price action before an aggressive spike. Okay, this is one of the entry methods that I teach our guys, how to get involved on a trade like this. Okay, so if you want to learn this, then come over to the website. I will teach you how to trade this kind of price action and what I'm looking for with an aggressive spike like that. It's just one of our 3 or 4 entry methods that we teach. Okay. So, in the end, this rolled over. It's currently set at a 6-hour trade, as you can see here. It's still open. I have taken some profits along the way, so it's not a true 6-hour trade, but either way, it's a nice swing trade opportunity. What was that on the back of that? So that's Friday setup. Now then, we're coming into Monday. Now, Monday is a little bit different, because Monday, this is where I took my loss. So we're starting the week. I'm still locking in profits from my Friday short, so that means I'm up. However, I'm then taking a hit on Monday, so that's fine. So Monday, I'm saying no sweep, and that's still an option for either side. Again, you guys know I talk about this quite often, sweeping either the weekend highs or the weekend lows and getting a small time frame reversal. Worth noting that spot is continuing to sell off while perps are still bidding across the board, which does make me lean slightly bearish. Okay, So what I'm referring to here is the spot price action is selling off. Now, I don't mean the actual chart itself. I'm talking about CVD, but perps are trying to bid. So in this instance, I'm following spot and saying I do lean bearish initially. So resistance, first and foremost, I'm talking about taking the highs, and I'm saying the guys exactly what I want to see if I'm going to take a trade from there. And if I don't see that, then I'm not taking a trade. Okay. And you can see here, if no swing failure pattern in the end, I'm looking back up to that 29.5, and that's something I've talked about time and time again on this video, on this channel. So support 27.4k, 27.4k daily level, and it's also an algo pocket level down here. Okay, so once price hit this, we had a bounce, then we came back down and we took the lows. We had a swing failure pattern of these lows. Okay, but I wasn't that convinced at these lows. Okay, so what I'm saying to the guys is, if I'm given something like this, I'll get involved. Once again, I stress I have no interest in longs until I see some kind of strength. If that means I miss a move, that's fine by me. Okay, so what I was looking for is I was looking for price to come back up, take these highs, which it did, and then I'll look to add back in. So therefore, it took the highs. As mentioned in BTC charts, I did take a long from the algo. However, I'm still not massively convinced yet. A structure still looks like a slow bleed. I will happily cut if this bleed continues and wait patiently for something else. Now, what happened is I took the long, I got a little bounce, didn't change any structure, and then it continued to sell off. So from this, I'm realizing it's still in a slow bleed environment. So I'm not happy to long this now. So therefore, I cut the trade, ended up getting out roughly for a half hour loss. Okay. Now, again, if I held on to that for a full hour loss, it wouldn't have made a massive difference in the grand scheme of things. But it's understanding that and recognizing that I didn't get that follow through on that initial move up after it. So therefore, I got stopped out and I took a loss. Now, is it the end of the world? Was I upset by this? No. Because in the end, it came back down and then got the bounce. And did I catch that long? No, I didn't. No, I didn't. Absolutely fine. I was happy to be sidelined for this. Okay. So that's Monday's plans. Now we're coming into Tuesdays. Let's get rid of Mondays. Hide. Now, Tuesday, we didn't really have much. This happened on the live stream with the members. So what we had is we had a low, we had another equal low, and I'm looking for these lows to be swept then. Now, what we had in the end is we actually got these lows swept. But live on stream at the time, I was saying to the guys, I'm not interested in this. And the reason why I wasn't interested in this is because there was no volume in this sweep. Now, this sideways range went on for roughly 5 hours. 5 hours before then taking the sweep. So therefore, in that 5 hours, there was plenty of time for people to be longing all this and placing the stops just below the low. Okay, so therefore, what I expected was, with a swing failure pattern like this, I expected all these stops to get stopped out, loads of volume down here, loads of excess, and then to reverse. Okay, and then, as I'm saying to the guys, if this had happened, then I'd have taken a long. But because the volume was so weak, I wasn't comfortable with it. So this is where I was telling the guys the plan. So I wasn't comfortable with that low. However, I will happily get involved later if it shows me some strength. Now, if it had taken out this high here, come back down in some volume support and then come off, I'd have happily longed that. But for the time being, I wasn't comfortable with this low. So a lot of people would have longed that as a swing failure pattern, absolutely fine. But this is what the beauty of understanding order flow is, and understanding that there was just nothing there. There was nothing there to trigger a long. Okay, so it's understanding when to sit out of the market. So Wednesday, I'm coming into the group. Hopefully I saved some of you some money last night with that low, referring to this one. That's why I mentioned on the stream that I don't like the low, and the only way I'd get involved is a clean market structure break above the pivot shown, which, as I just showed you, was this pivot here. Okay, 27.5k for easy numbers. In the end, we've broken the channel and came down into the naked point of control. Okay, now we potentially have a double distribution day on the cards. Now, if you're not understanding of TPO theory, then a double distribution day is the correct term for a BART pattern. Okay, and you guys know I've been trading BART patterns left, right, and center over the past few months, and they've had a very high hit rate. Okay, so I'm understanding that this is there, but I'm saying I'm not convinced with the low so far. And I'm talking about this low here. I'm not convinced with this low. So what I wanted to see, if we get a simple swing failure pattern, come back down, take these lows, then show me some strength, then I'd have got involved in a long. But we didn't get that in the end. So some people will have traded this as a swing failure pattern, absolutely fine. But the reason for me, again, I'm going to show you this because I'm not full of shit. is this is the low marked out here. This is the first low. The second low, which was a swing failure pattern, there's not many positions that have closed out underneath this low. So this, for me, in my own criteria, does not meet my setup criteria. So therefore, I'm happy not to take that trade and then wait to see if I get that sign of strength. Similar to that setup the night before on the Tuesday, similar to this setup, I wasn't convinced with that low. Okay, now in the end, I missed a move. I missed this move because we then came up, we came back down into the golden pocket, and then we rose up again. And I was happy to miss that move. Okay, now I know a few of the guys in the group didn't take a long from there because I said I wasn't taking a long from there, and some of the guys felt like they missed out. Okay, so I'm explaining my thoughts in this. So I'm saying these things happen. As I updated, I'm happy to be sidelined here. Still don't like the low, and I didn't like the market structure break. Wasn't convincing enough for my own trades. The trick is being comfortable in your own plan. My own rules said that I didn't like the long setup, so I was happy to either wait for a better trigger or sit back and wait. It's having the confidence to say, yes, this meets my criteria, or no, I will sit and wait. And if that means I potentially miss a move, then fair enough. What's next? Okay? So if you miss one trade, it's not the fucking end of the world. There's another setup on the horizon. And that's what this follows into. It's just acceptance. I'll never sit here and think, fuck, I wish I'd have longed that. I literally have no feelings towards the market moving up. Okay? What I do have feelings for now is, do we get acceptance back into the channel or not? And this is where we are right now. Okay? So then this moves into the plan that came after that and the higher probability trade setup. Okay, so I'm going to show you this first and foremost. So this channel that I'm referring to is this channel here. Now, once again, this is actually an Elliott wave channel for me, but other people might have drawn this on the chart absolutely fine, just as a straightforward channel. Not a problem. What we had on the day itself, on the Wednesday, we'd broken this channel in the morning. We'd had the rise up and come back into the channel. Okay, so as I'm saying to the guys, I'm interested in now what happens at this channel. Okay, so as price is squeezing up, I'm saying to the guys, we've got a big squeeze of the breakout bears. What I'm referring to here is anyone that shorted this breakout move down, okay, is now getting squeezed back out again, back to its origin. Okay, now if we get a sign of weakness in this region or a market structure break, then I'm looking for shorts. Okay, now in the end, what do we get? We're on the 5-minute chart. We came up, we took the highs, we came down, then we got the market structure break taking out the lows, came back up into the 382. There's your entry. And then we got the follow through. Okay, so in the end, that ended up being a 9-hour trade, coming back down to this naked point of control down here. Okay, so once again, if you risked $100 there, then you got a $900 return. And the reason why my stop is just above this channel here is because my thought process is if we get back into this channel and start moving up, then we're going to easily contest these highs, which is going to stop me out anyway, which is then potentially going to give me a new trade setup, which is fine. But this channel, for me, was key for my current Elliott wave counts. Okay, both a bullish and a bearish interpretation. So therefore, this is why my stop's very, very tight on this one. Okay, then we got the move down. As we get the move down, I'm saying to the guys, I need to see some strength before getting involved. I'm not blindly longing this. Because of what we've seen over the past few days, we've just been getting this slow bleed environment. I'm not blindly longing this. Okay, I want to see a change of structure. Okay, I'm happy with this low. I was happy with this low because we had a lot of excess under this low. You can see the screenshot here. We had a lot of excess under this low. A lot of people got stopped out. We also had some people trying to short the breakout, or the breakdown, sorry. And then I'm updating the guys. This is the line I'm watching for a market structure break right here. We came back up. We broke it successfully in 5 waves. Broke the move. We came back down in 3 waves into the 382. That gave me the long setup, which then played into, well, it was just short of the monthly open. Okay, take profit 1, stops to entry, and I'm probably getting stopped out. In fact, I will have been stopped out just now. Okay, absolutely fine. So therefore, I got my take profit 1. I took 80% out of this trade because, once again, I'm still not confident in it, and you can hear that from the tone of my voice, what you think I'm looking at next. Okay, so there you go. So this is what it's like to be a trader. You win some, you lose some, and you miss some. And no matter what outcome it is, whether it's a winner, a loser, or a miss trade, you've still got to remain neutral to the market. Okay? Treat the numbers, treat the money like numbers on a screen. Do not get an attachment to the dollar value, because if you get an attachment to the dollar value, then losing a trade and missing a trade will really fucking hurt. And then when you win a trade, you get overexcited and then likely is overconfident. Okay. If you want more tips and tricks like that on how to trade properly, come over to our website, spitfiretraders.com. There's a link here to our free Discord. Okay. But if obviously you want to learn from the modules and understand all the psychology and everything else behind it, Elliott Wave and all the other stuff that I teach, the entry methods, then come over here, click buy now. Okay. And once again, we've still got the offer running where if you want to do a trial run and get 1 month for £25, then you can do. Use the code trial25 at checkout. Okay. And I'll post this down in the description below as well. Trial25 at checkout, and you'll get 1 month access to all the modules, all the content, including the private Discord with my trading plans and real-time thoughts like you guys see every single week, and it'll cost you 25 quid. Okay. So if you guys want access to that, there you go. Right. What am I looking for next? How long have we been going on? 20 minutes. Wow. This is a long one. But then again, we did have a lot to talk through. Okay, so what we're looking at next, well, it's the same range that we've been talking about for ages. And look where we are. We're at these range lows. It's magic, that. I've been saying for weeks and weeks, well, months, in fact, the only two ranges that you need to be aware of, this one and this one. And look where we're back to now. We're back at the range low. Okay, so what's my thought process here? If this holds, then we can start looking to work our way back up. Okay, now again, the local trend is bearish, even though this part is bullish. Locally, it's bearish. So we need to start changing some structure here. Okay, going up. And you've seen I've just been stopped out of a long, and that's absolutely fine. If I get another opportunity, another sign of strength, then I might take another long. But again, if you want real-time access to that, then it'll be in the group. So if this does hold, if this region does hold, now it's a bit of a region because the actual sticky zone itself is just below. Okay, this is the sticky zone here. If I remove this squiggle. If this holds and gives us that strength, then we've potentially got a long trigger. And if we have, then coming up, then we'll be looking at contesting these highs into this big zone here, this 29.5k zone. Now, once again, I reiterate, this is a big zone no matter what type of trader you are. Order block trader, ICT style trader, Elliott Wave style trader, Fibonacci trader, whatever. It's a big zone, is this. So there's a lot of eyes on it. Okay, which is why I wasn't surprised at this being a front run. Okay, big eyes. So if we get up here and it gives a suitable entry, then we've potentially got short triggers. If that doesn't give us anything, then we can look back up towards range highs. Okay, if we get above range highs, quite simply, do we get a reaction off range highs, or do we come up and do we take the liquidity above these, run these stops, and then run it down? Okay, there's three options up here. 1, hit the range, reject. 2, take the highs, reverse. 3, go straight through. Okay, if it goes straight through, you guys watch the previous videos, you know my higher targets if that happens. Now, what happens if this just rolls over? Well, if this just rolls over and we don't get a reaction in this first sticky zone down here, then I'll be looking back down here. Okay, now from here, do we get some sort of reaction? Maybe a swing failure pattern into this old range, the old macro range from the June lows up to the initial breakout in March this year, yeah. Then we've potentially got a long trigger. If that doesn't give us anything and it just gets acceptance back in, then we're just going to ride this down. Okay, ride this down. Major levels of interest would be EQ, these lows, and just trading the range. Okay, simple as that. Simple as that. You don't have to overcomplicate it. You don't have to see the granular trades that we take on a lower time frame within this. You don't have to trade like that. You literally can just look at the overall range or this range. Okay. If you just want to be a swing trader and trade the higher time frame stuff, there you go. That's what it is. Okay. Right. If you've learned something today and you found value in this video and you want more videos like this, hit the likes. Don't forget to leave a comment down below and tell me that you've learned something. Or if you think I'm an absolute joke, you can tell me that too, because I really, quite frankly, couldn't care less. And if you're not subscribed, consider subscribing. All right. As you were, gang. Bye-bye.